Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 31st of May, last day of this particular calendar month, and from tomorrow is June, a new month, a new beginning. And the May month has gone all right. It's been okay, but except for a few things the options volatility was very high in this particular month, and the way options behaved was very different. Uh, it started all from week 4, I would say, when there was huge movement on calls and puts on both sides, and this is not very normal. This was not very normal whatever happened in the first 3-4 days, and it would have thrown a lot of option sellers out of the market. And however, anyone who stuck to their systems would have recovered also all of it, because Wednesday was the biggest decay that I have seen for a very long time. So one single day when no one would be there in the markets, because after the Tuesday's expiry, everyone would have been out of the market. That is when the maximum decay came. I would say it was such a big decay usually doesn't come on non-expiry days. And then immediately after that was Thursday expiry, which again went off well. So options volatility subsided a lot on Wednesday and Thursday, and even Friday, I would say. The VIX, which was rising heavily, which started on last Friday till Tuesday, also subsided a bit. But this just reminds me of October, when the markets were behaving in this particular fashion. The options were behaving in exactly the same fashion, and we all know what happened after that. The markets corrected a lot. I'm not sure whether this particular options movement also indicates that the markets are headed for a correction. Surely the markets are down from 25,200 odd to 24,750 odd levels. But is this a precursor to a very big correction? I don't know. We will have to wait and see, because all the indications on the macro front are fine. It's just that we had run up a lot. We had run up almost 3 to 4% on a single day after the ceasefire news. So a lot of it is getting evened out, I would say, during this period of time, and it's a consolidation phase which is going on. But the options movement was very volatile, and when such things happen, then you tend to worry a bit that what is in store. But having said that, the portfolios are doing good for me and my clients. The portfolios are doing absolutely fine, and why that is fine is because in our portfolios we have a good combination of lot of instruments. So we have gold, we have fixed income, we have within fixed income we have various type of bonds, we have gilts, we have a combination within equities or mutual funds of various underlyings, for example small cap, mid cap, large cap, momentum, alpha, value, quality. It's all there. So whenever a particular asset class is, let's say, in trouble or not performing, the other asset classes do come in and help. So there is a way to construct your portfolios as well, and that is what I do for a living as well. I help people construct mutual fund portfolios. So if anyone is interested, the link is there in the description. They can check out that link. They can fill up the Google form, and I shall get in touch with you if you're keen to get a good, strong, solid mutual fund portfolio made for yourself. If you're looking for some particular goal in the next 3 years, 5 years to achieve, then I can help you in terms of how to go about it. It's all free of cost. There is no cost involved in it. And if you want to get an existing mutual fund portfolio analyzed, you can write in for that as well. So I have a tool in which a lot of good information comes out. So information will come out of what your existing funds are, what is the CAGR, how much have you redeemed, which category of funds they are in, what has been the performance within those category of funds, how are those funds ranked, and so on. So lots of things. Just in case anyone is interested, please fill up the Google form in the description. So coming back to the market, the markets are looking all right, but there was this concern of the options, as I said, which got subsided in the last 3 days. So we will have to wait and see how things pan out going ahead. And there are a lot of news is coming from outside India, which is like US bond yields is one. Geopolitics, Iran and Israel tensions are there, Middle East tensions are there. So a lot of geopolitical news is there, which markets try to factor in. Japan yields is another problem issue, which is there, and of course the trade war, tariff, etc. That news is always on. So the news flow is happening from outside India. In India, everything seems to be all good, especially on the macro front. Liquidity is not a problem. RBI might cut rates. So from India domestic front, things are looking good. The earnings have been decent for companies. And valuations is the only thing which is slightly concerning on the Indian front. Valuations are slightly ahead of themselves, especially in the small and mid caps. So we will have to see how that plays out. But if things are good on earnings front, then as of now we are okay, except for the fact two negatives which have come out, which I'll speak to you about in the video today. So let's begin on the market outlook for this particular week, and let's see how things are stored for us. So this is the Nifty chart. This is how Nifty behaved on Friday. It was peaceful, calm, within a range, slight downward bias, but nothing major to look at. But the more important one is the Nifty daily chart. So if we see the daily chart over here, as you can see, we ran up from 21,700 odd bottom that we made on 7th of April on the tariff news. We ran up straight to 25,200. Okay, it was one way rally without any consolidation. The consolidation only started after that, and now this becomes the new resistance. 25,200 is the new resistance, and now we are even trading slightly below this blue line, which was the previous resistance. So we are now struggling to clear this line, and we are somewhere around 24,750. What is going to be important is if we go down, 24,200 is going to be the support, and then there is no support after that. So we really don't know where we are going to stop if we break this. On the upside, if we are able to break 25,200, then we should be able to comfortably take out the last top, which is 26,200 odd. So that is the prognosis right now as we speak. Now coming to Bank Nifty. Bank Nifty is in a much better shape. It's almost touching its all-time high, which by the way, it had already broken on 23rd of April. So it is going to retest that. So this is the strength that you're seeing. Nifty came nowhere near its all-time high of 26,200, but Bank Nifty broke its previous all-time high on 23rd April, and it's again approaching its all-time high. So this is how the strength of the sector is seen. Banking has not performed very well for last 3, 4, 5 years. In fact, I would say for a very long time. After that 2017-18 huge jump that we saw in the banking sector, it's not really performed to its true potential. Banks have come off. Some of the private sector banks used to trade at 5 times, 6 times book. It was considered normal. They are now back to 2, 3 kind of price to book. So things do change, but and then we saw a period where valuations of bank became dirt cheap. Public sector banks, I'm not talking about that they behaved slightly differently because their price to book had gone to 0.5. But the private sector banks, the valuations was very, very encouraging, I would say, even a year back. And they were trading at 2, 2.5 times price to book. High quality banks throwing out tremendous cash flow. So now that thing is playing out, the valuations are playing out, and banks, as I speak, in my opinion, are still fairly valued. They are not richly valued still, and the kind of growth that they show, 15-20% growth. So there's a case probably, for banks to be rated on price earning multiples at some point in time, instead of just price to book. So asset quality has improved in banks. NIMs are doing fine. So banking as a sector, is doing all right, and it probably is going to break its all-time high. It looks like that. So that's doing perfectly fine. Now coming to something more interesting that happened on Friday was that the open interest 5.75 crore calls have been added versus 3 crores of put. So if you look at the current OI, it is at 0.58, which is very less. Okay, so there's huge shorts that are being built in the system. Almost 6 crore shorts additional have been built, and PCR is at 0.58. 0.58 optically looks very, very bad, but the difference is only 6 crores. So I would not give it too much credence, but yes, it's a very, very negative sign over here. So if let's say calls go to 20 and puts go to 10, then it's big trouble for us. But this is also a warning sign, that 0.58 is not good as we speak. In terms of the premium decay, there was no premium decay on Friday. We opened at about 411 for Nifty Straddle, and it closed at about 408. So there was no decay. It in fact went up during the day, but thankfully no stop losses got hit. So no decay in Straddle premiums as well. This is how the sectoral performance was for all the sectors. VIX cooled off, as I have been saying for quite some time, that VIX had risen up a lot and it has cooled down. Metals was down, IT was down, so a lot of sectors were down. The only ones that were up was banking, small cap, and financial services. So it was a kind of a dull day with a negative bias on Friday. Now coming to the important one, how are the what are the FIIs up to? So FIIs have been okay in the month of May. They bought about 11,000. Look at the DII buying 67,000 crores they have bought this particular month. But 30th May FIIs sold, they sold about 6,500 crores. And we have seen, when FIIs come to selling, they can sell about 1 lakh crores a month also. So if that kind of selling comes in, then the market comes under pressure. But as of now, this particular month, both DIIs and FIIs have bought. So let's see how things go. FIIs have increased their short positions on futures as well. So let's see how June pans out from a FII perspective. But 1, 2, 3, 4, 5. 5 days after 5 positive days, they finally sold on the last day. This is how the indices are placed from their 52-week high. So if you look at Nifty Bank is almost there. Nifty 50 is 5.8% down from its all-time high. Mid cap is down 6%. Small cap is down 10%, almost 10%. Nifty next is down 15. FMCG 16. Realty almost 18. IT is the laggard at 19% down. And Momentum and Alpha are close to 20% down from their top. So we are still not in the bull phase, I would say, but recovery has been smart because Nifty had gone to almost minus 15%, small cap had gone to minus 30%, Nifty next had gone to minus 30%, Alpha and Momentum had gone to minus 40% from the top. So there's been a smart recovery from there. Like for example, Alpha, it had gone to minus 40% from the top. Now it is minus 19%. So it has already covered 25% from the bottom. So it had gone to, this particular Alpha had gone to about 39. It's at 49 right now. So almost 25-30% up from the bottom, right? So anyone who invested in the bottom would have made good money, and that is what I suggest to my clients as well, that whenever indices are correcting, whenever mutual funds are correcting, that's a good time for you to invest because you're getting those many more units, you're getting, and the risk is very, very less, because if you're investing in mutual funds, you're investing in indices, the risks are spread across those many number of underlying. Whereas if you're investing in a particular stock, never average down, because you just don't know, the stock can go to zero as well. But index will never go to zero, or a mutual fund typically will never go to zero. So whenever the correction sets in, it's a good time to deploy some lump sum base, provided that you're following a system. Now coming to how the international cues are placed. Okay, so before that, this is an interesting chart that I wanted to show you. This is from Value Research Online. So what it basically is showing is that the performance in the last 1 year of various categories. So the top performing one is the gold, then pharma at 19, international equity at 18, technology at 16, in spite of correcting a lot, banking is at 14, and then gilt at 10-year constant duration has performed very well because the interest rates in India have gone down. It's at 11.65. So that's another thing, that one should have debt in their portfolios, as I have been maintaining, because it helps you during times when equities haven't given too much return. So let's say if equities has given 5% return over the last 1 year or 10% return over the last 1 year, and equity will go through periods of correction, like we saw what happened from September 24 to March of 20. September of 24 to March of 25, markets fell tremendously, especially in February 25, they fell a lot. So anyone would have had debt in their portfolio would have mitigated the impact of equity going down. And 8-10% yield in fixed income is pretty good if you're investing in good debt fund instruments. So again, that is another thing that I cover in my mutual fund portfolio, which is investment in debt instruments. So if anyone again is interested, the form is there. So debt instruments should be a part of your portfolio because they help you soften the blow when equities are not performing, and they give you good returns as well. So that is a limited point. This kind of reminded me in this return. Credit risk funds, slightly risky, but they've given 11%. Long duration debt, gilts, all 10%. A hybrid is given 10%. And what else? So let's go to equity over here instead of. So small cap has given 8% return over last 1 year. There, it's been in a tough spot. Flexi is at 8, value is at 5, and thematics. So PSU is at -3. So PSU story got over somewhere in May, June, and it has not performed except for defense, which has done well. So all the other sectors have been lagging behind the market. So pharma becomes number one, followed by international tech and banking. That's been the performance of last 1 year. If I change that to 3 years, technology becomes the worst performer and the best performer becomes PSU. We have seen that story, how it played out. So you can see there's a sector rotation that keeps on happening, and it is important, not to try to gauge which sector is going to do well, but invest in probably multi-cap, flexi-cap, large cap kind of names and mutual funds. That helps, because it takes care of all the, and if you're really a momentum guy, then there are momentum funds to look at, which will pick up the ones that are moving the fastest. So that was, I thought I'll share this snapshot with all of you. Now let's come to what is happening in the international market, and this is how the US 10-year is behaving. It has come down a bit, which is good. Now VIX has come down a bit. 30-year, 10-year have come down a bit. Nasdaq closed in the red, but it's mostly flat. Futures included. Bitcoin has come off a bit, and the dollar index is below 100, which is good. Oil is behaving well, 62. USD INR is absolutely fine at 85, and gold and silver are also holding up. So international cues are all right. News flow is not that great. So we will have to wait and see how things pan out on the international front before taking a call on the direction of our markets. Open interest is negative. FIIs are built in short positions. So let's see how the market reacts on Monday and the next week and the next month. And let's hope that the volatility that we have been seeing subsides a bit, and the option sellers also do end up making money, because it's a tug of war between sellers and buyers. And market, if it goes to the extremes, is not good for anyone. So that is what we see when volatility rises. So hopefully volatility will cool down and the markets will stabilize a bit, and we shall have a good month going ahead. So that's it from me now. If you like my content, please do subscribe to the channel. Please share it with your friends, and I hope you found it useful. And please do comment about your experiences, how you find the video, or pretty much anything that you want related to the markets. We'll be happy to oblige, and I like to read the comments. Okay, so that's it from me now. Thank you for watching. Take care. Bye-bye.